Hello, and a very good morning to everyone. To our Muslim friends, I would like to wish you Salam Ramadan. On behalf of TM1, I would like to welcome everyone to our exclusive session, Digital Banking in the New Normal, Think or Risk being Sunk. Hope everyone is staying safe wherever you may be. We appreciate you taking the time out of your busy schedule to join us here today. With me in this session today, Mr. Zaman Zulkifli, Head Enterprise Sales CM1, and our speaker, Mr. Mohamed Iran Moriff Muhammad Sharif, Chief Operating Officer, Bank Islam Malaysia Berhad. Mr. Iran will be sharing his professional views on resiliency, cybersecurity, and digitalization in the banking sector. This is indeed a very interesting topic, considering the pandemic is very unprecedented, hence rendering the public adoption to digital banking more important than ever. We will have a Q&A session after the end of the presentation from Mr. Iran, and I bet there's a lot of questions in everyone's minds. Without further ado, I would like to invite Encik Zaman Zulkifli, Head Enterprise Sales PM1, for his opening remarks and hand over the session to Mr. Iran. Encik Zaman.
Thank you, Ami, for the introduction. Assalamualaikum and a very good morning. And thank you everyone for being here in our exclusive webinar, Banking in the New Normal, Think or Being Sunk. We hope that you are staying safe and healthy at home with your loved ones, while also staying productive at the same time. For Muslims, inshallah, it is still not too late to wish everyone Ramadan Kareem and Selamat Puasa. We value your time and participation in the discussion of a topic that is very relevant today for all industries and especially so for the banking and financial sector. Over the years, the banking sector was already disrupted by technology, and today the COVID-19 pandemic became the ultimate disruptor for many organizations. This requires banks to be agile, flexible, and creative to face the disruption waves and to continue to remain relevant. This morning, we are fortunate and grateful to host En Mohamed Iran Moriff Muhammad Sharif, the Chief Operating Officer of Bank Islam, who will share his thoughts, insights, and experience on this topic. With over 2 decades of experience spanning from being in audit with Pricewaterhouse, telecommunications with Cable and Wireless UK, and banking with Bank Islam, Encik Iran from his experience has a unique perspective to share for the banking industry. Without further ado, I would like to welcome Encik Iran Moriff for his webinar session on banking in the new normal, sink or being sunk. Please, Encik Iran, over to you. Thank you very much.
Assalamualaikum and a very good morning. Thank you, Encik Zalman, and thank you, Almi, for the introduction. First and foremost, I wish to record my sincerest appreciation to Telecom Malaysia for giving me this opportunity to speak at this webinar. For those who have just joined, my name is Iran Moriff and I'm the COO of a local bank in Malaysia. And the topic that I have been asked to commentate today is digital banking in the new norm, sink or risk being sunk. Actually, when I first was approached to do this session on the mid-February, the plan was to have this event on a grand scale in a summit in a conference hall at the end of March. However, on the 6th of March, I was informed by Telecom Malaysia that the summit was going to be postponed due to the coronavirus. And since then, we all know what happened. The leaders of every country in this world had to announce drastic measures to combat what we know now as COVID-19 virus. Malaysia was no different. On the 18th of March, upon the instruction of the newly minted Prime Minister of Malaysia, was also put under lockdown, today widely known as MCO. So how did we do? Well, the actions that was taken were pretty drastic actually. Malaysia's action on the pandemic was ranked 4th strictest in Asia. We closed all schools, colleges and universities. We closed most workplaces. We closed all places of worship. Even the weekly Friday prayers were stopped. We cancelled public events. We closed public transports. Movements were restricted to 10-kilometer radius. No crossings of state borders were allowed, and we restricted international travels. Alhamdulillah, after 8 weeks in isolation, it looks like we have the situation under control. As of last Saturday, the number of new cases have dropped from what was as high as 235, now has stabilized to around 50 cases per day. Malaysia is also doing well on recoveries, recording a 75% recovery rate, one of the best in the world. And for this, I think credit needs to go to our medical workforce, our doctors, nurses, hospital assistants, and health workers. Unfortunately, however, 109 Malaysians did succumb to the virus. Also suffering is our nation's economy. In his speech on the 1st of May, the Prime Minister declared that our country was losing 2.4 billion ringgit a day during the MCO period. In order to stop that bleeding, it was vital that we strike a balance between saving lives and saving livelihoods. It was then declared that starting 4th of May, the country will move to a new phase called conditional MCO, where most businesses are allowed to reopen, subject to strict adherence to the recommended SOPs as laid out by the respective industry authorities and regulators. We banks are guided by the SOP formed by Bank Negara, which was released via My Lord on the 1st of May. Going to Site 4, the broad principles of SOP recommended by Bank Negara are for all the banks to keep the number of staff at the premises to a minimum. The majority of staff to continue to work from home, to continue to observe social distancing and crowd control, to actively promote the wider use of electronic platform, to keep a record of staff, customers and third-party service providers' movements for contact tracing purposes, to encourage staff and customers to self-sanitize and to enforce temperature and well-being checks at the entry points of bank premises for all staff and customers. Now, these are the new norms that we will all have to live with, at least for the next 18 months until a vaccine is found. We can no longer shake hands and touch one another. We need to wear masks. We need to ensure that we do not get infected and we do not infect others. Some of these new norms will undoubtedly result in an increase in investment in technologies. For example, in order to allow staff to work from home, mobility will have to be improved. Staff who were previously issued a desktop will now be given laptops to enable them to work from home. Their devices will need to be equipped with a video conferencing application such as Microsoft Teams. Also, the IT security team will need to enhance their security capabilities because now staff are logging in from home using their own Wi-Fi and are no longer enjoying the firewall protection that once we got from our offices. For item 3, banks will have to continue to spend and accelerate their investment in contactless solutions. This involves enhancing the customer touchpoints, such as internet banking and mobile app, to compensate for the friction felt by customers at the branches. And then for item 4, branches, banks may want to invest in a location-based application that would record the movement of customers. But this needs to be thought through to ensure that PDPA rules are not breached. So I do see that technology companies like Telekom Malaysia can assist banks to grapple with the threat of COVID-19 and help banks to adjust to this new norm. Yes, the new norm will most definitely increase the ability, the operating costs of the banks, and this will likely hit the bank's profitability. But I don't expect this to have a major impact or cause a deviation to the bank's current IT roadmap. I'd expect enhancements to the internet banking and mobile apps to continue, especially those that are being driven by PayNet. The emergence of this pandemic, if anything, has merely reminded us all of the importance of contactless payments solutions. In these trying times, I also expect banks to be more savvy and frugal when spending on their IT budget. Therefore, it is important that banks have the right approach when investing in technology. And one of the most fundamental things that needs to be understood by all banks is the difference between digitization and digitalization. Investment in either of these initiatives must be handled differently. So what's the difference between digitization and digitalization? Digitization is all about converting anything that is manual or paper-based to be digital. For example, transactions such as cash depositing and cash withdrawals, when done over the counter, when not digitized, will require the customers to complete a voucher. This process, when digitized, will no longer require the customer to complete these vouchers. Instead, the customer just needs to walk up to the cashier, present his IC, and state his requirement. A computer printed voucher will be produced by the cashier, and the customers will only need to confirm the transaction by pressing a button. That's digitization. Now, digitalization, on the other hand, involves coming up with revolutionary solutions altogether, using cutting-edge technologies like blockchain, artificial intelligence, etc. Most banks can make the distinction between digitization and digitalization. However, from a governance and organizational structure point of view, for a bank to be successful, it is best that these two initiatives be kept apart. Digitization usually is being led by the CTO or the head of electronic banking, and digitalization should be led by someone else altogether, a new person or head of transformation. For digitalization to be successful, the way of thinking, the ideation, the teams, the process, the support function must all be different. If you have the existing digitization team, the CTO and the head of electronic channels to run the program, you are likely to end up with the same traditional solution. In both cases, the motivation for going digital is same. Digitization or digitalization improves efficiency, resulting in faster turnaround time for customers, reduces errors, and reduces service variability. It also generates growth, mainly through cost savings, and it avoids threats because risk will be reduced and you will be in compliance with regulatory requirements. Currently, there are 5 obvious customer touchpoints offered by most banks in Malaysia. I've listed here the most traditional services on the right-hand side, and we start off with branches. Branches for all banks have been around since we commenced operations. For Bank Islam, for example, that was in 1983. Today, if I were to rate branches, I'd probably give them a 5 out of 5 for human touch. But branches fail miserably on accessibility because it's very location-based. It fails miserably on speed because it takes a longer time to process as forms to be filled, and it's a lot more costly. Branches are also open to the risk of fraud and theft, be it internal or external. And most recently, branches are susceptible to risk of unauthorized disclosure of customer information, of which under IFSA legal framework can lead to fines of up to 10 million ringgit or 5 years imprisonment or both. If we look at the telecommunications industry, the Celcoms, the Maxis, DGs, used to have a lot of branches or outlets for paying bills. Nowadays, there is a reversal of that trend, and banks are following suit. Over the last few years, banks have been reducing the number of branches as well. My shop itself, we closed 5 branches last year alone. To the bottom of branches, we have contact center. Now, like branches, there is a service that has been around for a long time. They provide 2 types of service, basically. One which allows you to speak to agents. Nowadays, this service is limited to troubleshooting customers' problems, usually related to card, PIN, or account issues. Or you can use the self-service phone banking. This service is now hardly used by customers because it allows only very basic transactions, i.e. checking for balance, whether it's your deposit accounts or the outstanding balance of your financing accounts. Now again, human touch-wise, this is as close as you get to a branch because you get to speak to someone. But in terms of functionality, the services offered is very, very limited. On the left-hand side, I've listed ATMs, and ATM is the cash cow for any banks because ATMs is the most preferred channel for bank customers. In 2019, 57% of banking transactions at my shop happens here. It is relatively cost effective, minimal capital outlay, cheap to upkeep, and it is fast and accurate. However, accessibility to SSTs or ATMs are still limited to geographical locations of the machines. By way of number of transaction, usage of ATMs have increased by 10% year on year. But in terms of percentage, ATMs are losing market share to internet banking and mobile banking. Internet banking is the star channel, if you like. It is accessible almost everywhere. It's fast it's cheap to run, and it's free from errors. Similarly, mobile banking is the superior clone of internet banking, allowing users to access their banking needs from anywhere at any time. It's fast, it's cheap to run, and it's accurate. The provision of multi-channel services to customers is what the techies call omni-channel. Omni-channel allows customers the option to perform their banking needs across a spectrum of channels, and having all these options for customers is good. However, how omni-channels has been implemented in Malaysia is very much transactional driven. You can check your balance, you can do transfers, make payments, but you cannot perform more complex transactions such as opening of accounts, applying for financing, at least not today. Also, these omni-channels are a bit disjointed from one another. Their systems don't talk to each other, which means that one system does not have a recollection of what happened to the other. And if a customer wants to proceed with his transaction, inquiry or order, the customer will need to repeat his conversation from the start or speak to the dedicated team. As an example, if you call up to inquire about your credit card, the person you speak to won't be able to answer your questions on your mortgage, for example, and you are most likely to be transferred to a different person when you want to inquire about your mortgage. Or when you go into the bank and tell them that you have been speaking to someone over the phone and you would like to go back to continue with that conversation, the person in the bank will most probably say, no, I've got no idea what you're talking about. And this is what I call synchronization. It is happening at other industries, and customers are demanding the same from the banks. Synchronization matters the most as pressure on digitization and digitalization escalates. The opportunities should traditional banks fully embrace omni-channel banking are extraordinary. In essence, it could mean a comprehensive joined up experience for the customer at every stage. So what are the other technologies out there that I think is critical for banks to consider and adopt? Well, the answer to that very much depends on the state of technology the banks are currently in. We all know some banks have had a head start in certain technologies as compared to others. Take mobile banking app, for example. The bigger banks have had their mobile banking out there for at least 5 years, but there are some who are just playing catch up. Similarly, for QR Pay, some banks have had it for a long time, and some are just rolling them out. So what I'm presenting here may not suit everyone, but what I wish to stress here is the technology is only half the story. Application of the technology to address the friction your business is facing, that's where the challenge is. For digitization, cloud computing, I think, is one of the biggest challenges that in this digital age that has brought to banking, because banking needs to respond quickly. The constantly evolving market that banks operate in and new challenger banks require them to be as agile as possible. They need to be able to provide resources across the enterprise in a timely manner to address business problems faster. High-performing banks have discovered that the most cost-effective way to achieve this is through an enterprise-wide hybrid cloud. Hybrid cloud also allows them to pick the benefits offered on both public and private clouds while addressing issues like data security, governance, and compliance. Hybrid cloud also allows banks to offer innovative new offerings to its customers through the hundreds of applications available in the cloud. Secondly, I think mobile and contactless technologies is important for the banks, because as the world moves towards a cashless economy, customers' expectations around payments have changed dramatically. Both customers and businesses expect payments to happen instantaneously, and this is where mobile and contactless comes in. The third item there I've listed is open banking. This is one technology that is going to feel like we bankers are shooting ourselves in the foot. However, this is now a reality in the Western world, and it won't be long before Malaysians demand the same here. Open banking will allow customers the ability to view all their financials in a single page. This will require banks to adopt an open API and enable third-party developers to build applications and services around the financial institution. This will allow for greater transparency and provide options to account holders to information that combines both public and private data. On the right-hand side for digitalization, firstly, I think artificial intelligence and machine learning is a technology that all banks should invest in. This is because the nature of banking, as we all know it, revolves around risk and return. The lower the risk, the higher the return. Within risk, there's a component called a likelihood, and likelihood is dependent on a whole host of things. North Korea firing missiles, for example, has repercussions to everything that we do. Similarly, if there is a discovery of a vaccine for COVID-19, again, it may ease a lot of people's mind. In truth, there are millions of data points that needs to be taken into account to quantify likelihood. And if a human brain tries to capture all this in its decision making, we will have an information overload. Now, what AI and machine learning can offer is they can assimilate this data faster than the human brain and provide a broad peripheral vision about the world. AI has shown that it can provide better predictions and allow users to respond faster to a situation. Blockchain technology is another technology that I think banks should look at. Blockchain is an open distributed ledger that can record transactions efficiently and in a verifiable and permanent way. By design, blockchain is resistant to modification, and this makes it particularly useful to combat fictitious documents and fraud. Some of the areas that can benefit from this includes clearing and settlement, know your customer, KYC, trade finance, mortgages, procurements and valuations. Some of you may be aware that Bank Negara is already leading an initiative to use blockchain technology in the area of trade finance. Second, and last but not least, big data analytics is the technology which allows increasing amount of data that is being generated by the banking sector. It becomes difficult to extract actionable insights that can help in growing more opportunities. Now, big data is the answer. This technology can undoubtedly put all the banking data, for example, debit, credit card transactions, ATM withdrawals, money transfers, etc., to make informed decisions and process it effectively to gain valuable information that is needed to stay competitive in the future. Big data helps in making banks learn about their customers in a better way, enabling them to make real-time business decisions through analysis of customers' purchasing habits, sales management, etc. Other added benefits of big data are better marketing, product cross-selling, fraud detection, customer feedback analysis, and many more. Additionally, it aids in identifying the latest market trends and streamlining internal processes to reduce risk. How much time do banks in Malaysia have to adopt these technologies? Very much depends on the push that we get from customers. But what's more important for me, and I want you to leave, this thought before I end, is technology is just a means to an end. It's how you implement it is what is more important. Thank you very much.
All right, thank you Encik Iran for the very insightful presentation. Next on our agenda is our Q&A session. And I've taken a few questions from the audience here for you, Mr. Iran.
Okay.
Okay, I'm going to go to the first one. Going digital on a full scale requires banks to strategize, not only on how they approach the market, like the customers, the shareholders, and the stakeholders, but also transforming the way they work internally. Between people, technology, and process, which is the most challenging element from a COO point of view?
Okay, good question, Amir. I have no doubt that people is the most challenging element when banks in Malaysia try to go digital. And the reason why I say that is because people formulate processes. Yes, existing processes that we have at our banks may not turn around a digital project fast enough. Let's take a project approval process, for example. For some traditional banks, the approval of these projects alone by the current process needs to go through perhaps 3 committee meetings at the management level and then 2 committee meetings at the board level. It may look like the process is causing the resistance here, but who designs the process? It's the people. Technology, on the other hand, the banks tend to rely on technology companies like Telekom Malaysia to come up with the technology advancement. So I don't think technology is a showstopper for a digital rollout. But people is the basis of everything. And when I say people, what I really mean is the culture. Which brings me back to the point that I made earlier. In order to successfully adopt a new technology and go digital, it's best to get a new team to work on the idea. Using the existing people may result in an outcome that is just digitization and not digitalization. Amir?
Okay, that is a very, very good answer. I'm going to go to the second question. Now, in allowing banks to adapt into new way of operating due to the COVID-19 pandemic, do you foresee that Bank Negara will be a bit more lenient in the enforcement of RMIT compliance this year?
Okay. I think we need to appreciate that Bank Negara's presence in our financial system is a noble one. They are there to protect the customers and the banks ourselves. They ensure the stability of our country's financial system. I think the RMIT guideline continues to drive that same noble agenda, albeit from an IT perspective. I think we can all agree that COVID-19 has set us back by at least 2 months, and we are still not out of the woods yet. As of today, most banks are still trying to find a solution on their office layout, for example, the sitting plan. This morning, I was just talking to my CTO, and we've identified that this is a problem because our staff and our consultants are sitting just too close to each other. So the problem is, how do we ensure social distance and keep our people 1 meter apart? Having said all that, I think the fundamental principles behind RMIT has not changed. These are recommendations that will elevate the standard of IT in Malaysia. So it is not at the mercy of hackers, and consumers are protected. So I think Bank Negara may be lenient from a timeline perspective, but the key deliverables have not changed. Yeah, Amir?
All right, cool. So we are going to move on to the next question from the audience. In your opinion, do banks in Malaysia still having the wait and see approach on outsourcing core technology? If yes, what, in your personal opinion, are the reasons?
I don't think that banks in Malaysia are adopting a wait and see approach, because we all know the benefits of rolling out digital technologies. In fact, most of us don't visit branches anymore. And instead we use our banking transactions or mobile first, internet banking second, right? So perhaps maybe once a month we visit the ATM for some cash. Even then, it's no longer in the thousands that we withdraw, you know. These days, I tend to withdraw 500 ringgit, and that lasts me for, you know, a good 1 or 2 months. But that's just us, the IT savvy ones. Unfortunately, the customers we serve are not like us. The older generation, customers from the rural areas, customers who are not IT savvy, they still prefer to frequent the branch and conduct their banking needs there, face to face with a human being. In fact, for most of them, visiting branches is quite therapeutic. It's a chance to interact with another human being, a chance to talk about politics, chance to gossip. So the traditional banks have no option but to continue to provide these traditional services. But unlike the new challenges and the fintechs, the traditional banks have got to maintain these traditional customer touch points, the branch and the call centers. We can't just close these channels down. There will be an uproar, and it would be totally irresponsible to do so. But it does mean that there are less resources to be channeled to digitalization initiatives. The resources allocated to keep these traditional channels up could have been used to use for digital initiatives. And I think this is the reality for most banks. Almi,
All right, I'm going to move on to the next question from Mr. Avanti. In terms of digital banking, how is Malaysia currently positioned compared with its neighbors? What special strengths does Malaysia have that it can tap to speed up this transformation in regards to hybrid cloud in Malaysia in comparison with others, for example?
In terms of digital banking, for hybrid clouds, I think people are using digital banking for convenience. We are at par with our regional neighbors, and for that, I think we have PayNet to thank for leading the initiatives. And and I think it's widely been accepted by a lot of our customers. People are using the internet to do payments of bills or to transfer funds. In fact, at shops, people are using QR codes to make payments for their purchases. So for digital initiatives, I think we are up there with our neighbors. In terms of cloud computing, again, this is a new area that we are exploring. The guideline is already finalized. Bank Negara has come out to say that they are comfortable with cloud computing. So it's back to the banks to actually propose. And I think for some of the non-customer services, some of the banks have actually put theirs on cloud. But for things that relates to customer sensitive information, I think the banks really have to work hand in hand with Bank Negara to iron out how best to do it on cloud. Omi, yeah?
Okay, thank you for that answer. I'm going to move on to the next one. COVID-19. How does it impact not only the banks, but also the ecosystems like fintechs, which has prior to the pandemic disrupting the banking industry?
Okay. I think if we are talking about just banking needs, I think COVID-19, if anything, should help further accelerate the development and acceptance of digital financial services introduced by banks and fintechs. Yesterday, I went to buy my dinner at a shop, and I noticed they have stopped accepting cash, and they insist on all the customers to pay using QR. And I think digital payments will by far be the technology that will immediately benefit out of this COVID-19. I think together with it, it will bring perhaps, the cloud computing, artificial intelligence technologies with it. Omi, yeah?
Yep, that's a good question. Moving on to the next question. Do you think the smaller banking players have the capacity to invest in technology and catch up in the tech game, given the challenge especially caused by the pandemic?
I think smaller bank players still have the capacity to invest in technology, but how much will very much depend on the state of their current infrastructure. If the data centers that they are already in is in a solid state, if their internet banking framework is up to the current standards, if they are already reaching out to their retail and SME customers using technology advances solutions like mobile, then obviously they will not have to invest much in these architectures and can focus on adopting newer technologies like AI. Huh? Amir?
All right. Going through the list of questions, I would have the final question for today. Someone anonymously sending this question. Where are the banking industry in adopting the eKYC for account opening, especially in our local bank?
So I think for eKYC, we're still waiting for the guidance from Bank Negara. I know there is the exposure draft has gone out and we have given our feedback to Bank Negara, but a lot of the banks are just waiting. It's something that a lot of the banks have got it in their plan, and I think it won't be long. Perhaps in the next 6 to 12 months, you will see eKYC solutions being run on the mobile apps, for example. So with that, customers will be able to, open up accounts, whether it's current account or savings account or fixed deposit accounts. Also with eKYC, it allows people to apply for financing, whether it's mortgages or vehicle personal financing. That will also be covered by eKYC. So it is coming, but I think a lot will depend on the final guideline that will be given out by Bank Negara.
Okay, I believe we have run through all the answers, questions and answers. Once again, thank you so much, Mr. Iran, for sharing your views and thoughts on today's topic, and to Encik Azam as well. And to all the participants for joining us in this webinar.